Good afternoon, everybody. This is Chris Robinson. I'm Saturday Marketing with today's post-close grain and livestock comments for Tuesday, January 27th, 2026. A 3 cent trading range in corn. Nothing really going on there. Down 1 3/4 cent. Disappointing. New crop corn sitting there at 454. I think if I'm a producer, there's not a whole lot of meat on the bone because the contract low is 440. We're 15 cents off that low. I want to defend as much of that as I possibly could. We haven't really been north of 473 in the past 6 months either. So, um, again, this is the time of the year where you kind of have to batten down the hatches and wait and see what happens between now and probably March 31st, planning intentions report. Um, the good thing is you don't have to spend a whole lot of money to defend that corn. Um, I just was looking at 445 puts for new crop corn for 60 days for 3 cents. So pretty cheap way to be. You're 10 cents under. You have a disaster put in case corn falls out of bed for 3 cents for 2 months. I mean, we have a 3 cent opening range half the time, so it's a pretty cheap way to at least set a floor. Moving on to the beans, another about 11 cent trading range. Couldn't squeeze out 13. Um, we did finish up 5.5 cents, although this contract has a hard time of 1069 and a half. If you look at the big move we had $1.35 sell off from the November high to the lows down there after the report. This 1069 level was 25% retracement of that sell off. Can we get higher? I sure hope we can. It is interesting that this market has a bid despite the fact that we've got a big crop going on in South America and China is pretty much done buying beans. Now there's some talk out there that the beans may be getting delayed, coming out of South America. I'd love to see something. We certainly do need a bullish story at this point for soybeans. But all in all, it's nice to see new crop beans sitting there at 1080. It's a lot better than being sub 1050. Can we get ourselves back up to 1130? I hope so. It is interesting that I've talked to multiple farmers where there are some commercials that are trying to get their hands on new crop beans at $11. So I don't know if there's something brewing out there that we don't know yet. But usually, if a commercial calls you up and they want something, um, they're generally not doing it because out of the goodness of their heart. So we'll see how that develops. It's interesting. There's never a perfect indicator, that's for sure. If there was a perfect indicator, nobody be driving an Uber here in Chicago, right? You'd just be trading beans and corn and printing money. But it is interesting that they would want to sort of have that. And then maybe they're using it as a buy stop in case the market blows up and they miss it and they don't get enough bought. So there could be other explanations for it. But the president was in Iowa today. Didn't really say anything. A few people maybe were looking to see if they said something about RINs or biodiesel or something like that. Uh, as far as I can tell, this is about 220. There was nothing specific said. Of course, that could change at any moment if the headlines change. Wheat, another tight trading range, 6 7 cent range, finished unchanged on the day. Chicago wheat is still trying to protect itself from going through the contract low. July Chicago wheat trading at 544. You don't want to be in a situation where you see sub 525 July Chicago wheat. That market is oversupplied and under demand, right? And we had a little bit of a bounce. We clawed up 12 cents last week and finished at a 1 month high, but no follow through. We need follow through. There's some technical stuff there. Now the stage is set. The funds are short 100,000 contracts of wheat. If they ever do need to get out, that would be a plus for bulls. We just need something to light the fire to chase them out of those shorts. Same thing for their short position in corn. They're probably short 85,000 corn right now. They're probably long 20,000 beans though. So that's how it sets up right now. If you look at it, money flow, when there's nothing going on demand wise and nothing going on weather wise, and yeah, we trade the moving averages, we trade the retracements, we trade all that technical garbage stuff that we hate. But this is the market we're trading in right now. In the protein complex, fat cattle finished down 60 cents, a tight $2 range out there, 38 to 36 in April. Feeder cattle had a little bit bigger range, but not much. 3 cents. We finished down 60 cents. For some reason, cattle has decided to stop rallying. We did have a tremendous rally to 3 month highs. We rallied back 70 plus bucks in feeders, 30 plus bucks in fats. We're taking a little breather here. I don't know why. Typically, cold weather like this, people will use it as an excuse to get ginned up and bullish, ginned up, like excited. Um, but we're just kind of hanging fire here. So I don't know which way the it's like a giant Jenga game, right? Somebody's going to pull out the wrong one. We're going to drop. What's the risk? The risk is they open the border with Mexico, or the risk is we get another screw worm story like we had last week. Remember last Friday when we broke like $6, right? Somebody was whispering about um, screw worm being North America. It's not. It did come within, it's always within a couple hundred miles of the U.S. border if it's in Mexico. That's why the border's closed. Lean hogs, new contract highs again. That's just extremely impressive. April hit 97 double, finished at 96.80. If you look at that, earlier it looked like we might roll over and go lower. We did manage to eke out a little bit higher day, which is good. That's a new contract high. We did barely finish out a new high though, just up 10 cents. So I would watch that carefully. Today is Tuesday. We'll see if we get Wednesday, Thursday, Friday, any follow through. US dollar a little bit lower. Diesel, we talked about that. We had a sell off from 271 to 205. That didn't get much press coverage. We had 7 month lows. I was all over it because I have guys that use a lot of diesel. And I didn't know that we were going to stop at 205. I wish I had because, I could have made enough money to buy the Steelers maybe. But you just trade these levels. The interesting thing is we bounced from 205 to 265. So in 8 days, we've gone up almost back to where we were before we started the break. We get up to 270, 271, it will have come full circle. Down 25%, up 25%. Of course, when we go down 25%, that doesn't get any coverage on TV. But 8 days in a rally like this, you're going to have people squawking, and rightly so, because nobody wants to pay more for their diesel. In silver, just a crazy market there as well. An $11 range from 113 to 103. It's trading 110 as I talk to you right now. Very, very difficult trade. It's basically trading on algos. If you're, I don't care if you're a bull or a bear, if you're putting something on, you're risking at least 3 cents either way, the way this market's trading. Very, very difficult to trade. So on that note, I hope my information helps you. If you're looking for help, go to robinsonagmarketing.com. I did post one of my letters today. I send these levels out every day, specific levels that you can use, bull or bear. I do have suggestions in there as to what some reasonable hedges may be for producers. If you're not familiar with that, if you want to learn more about that, if you want to learn more about how technical analysis impacts some price discovery, I just posted on Sunday night about a 25-minute webinar where I went through about 20 different charts, talked about support resistance and stuff like that. So if you're interested and you want to learn more about that, you can follow along with me there. Okay, everybody have a great rest of the night. This is Chris Robinson. Take care.